are you trying to just say, look, they should be calling out China and they're not, and that's what you're upset about? Or you're upset that they're not assessing them on ESG? I'm trying to understand because, and I will say, there has been a double standard. There are so many CEOs who come on our broadcast who have lots of different views about what's happening in the United States and feel that they cannot say something aloud about what's happening in China. Now, you can say that's hypocrisy. Some people would say that they're actually doing the right thing in terms of thinking about their shareholders and capitalism and all of that. I'm trying to figure out which side of this you're really on.
Yeah, so first of all, I think for everyday investors to at least see through the hypocrisy so they're able to make the right decisions for themselves. To be able to say that it is hypocritical and there's a deep-seated conflict of interest when you use shareholder power, client capital in the United States to tell Exxon or Chevron to drop oil production projects. But then in the other side of the world, for your Chinese clients that are invested in companies like PetroChina, encourage those companies to pick up those same projects that Exxon and Chevron are dropping for pennies on the dollar on the other side of the world. You saw a project that Chevron dropped in the Sichuan province. That's in part because Chevron has been the subject of Scope 3 emissions caps imposed on it by its large shareholders in 2021, including BlackRock, State Street, and Vanguard. Yet they don't say a peep. BlackRock does, even as it owns shares of PetroChina, as PetroChina picks up those same projects that Chevron and Exxon are dropping. So, Andrew, the thing that bothers me, to be crystal clear, is a conflict of interest that leads to a fiduciary breach, a fiduciary problem, where you cannot be a vocal advocate as a lawyer in a courtroom for the plaintiff and defense in the same case. Well, as a vocal shareholder, you can't advocate in the West that these companies need to drop production projects, oil and gas production projects, all the while giving from your left hand to the right hand when other funds that you manage own Chinese companies that are actually buying up those same projects. And by the way, PetroChina just reported some great financial results that it attributes to, wait for it, greater oil production investments that they made. So I think that it's the conflict of interest
Vivek,
and the fiduciary breach.
The issue, look, I think there's another issue here at play, and I'm not going to defend. There is a hypocrisy to those who will call out. Look, there are those who will call out human rights issues or other issues here in the United States. They won't call them out in other places. I'm not going to disagree with you that that is completely and utterly hypocritical. No question. But the question that I would raise with you is, here in the United States, for example, and in Europe, we have a lot of pension funds and consumers who are starting to vote with their feet and make some decisions around energy, for example. And they're not making those decisions in China. They're making them in Europe and in the U.S. And whether you believe that that is an investment opportunity if you wanted to be in clean tech, for example, or not, I'm just saying there's something else going on here.
Yes, so the thing that's going on is you're right. If you want to, with your own money, advance your own values and think that you're going to help fight climate change by putting your capital to work, it's a free country. That's your prerogative to do so. However,
no, but there are people who then say if that's happening, if that's a trend, if that's actually a trend, and we can debate whether it's a trend, but if that is real, if people are doing that, and if big pension funds in Europe are doing that, by default, if you're a U.S. pension fund, you probably should be at least acknowledging that's happening and say, maybe that should affect my investment decision because clearly there are going to be less individuals who are going to invest in those businesses.
So we've gotten past the stage of acknowledging, Andrew. What we've actually done is now taken trillions of dollars of other people's money who don't want that agenda advanced and use it nonetheless to use voting power and shareholder advocacy power to tie the hands of U.S. companies according to one set of perspectives. So you're right. CalPERS in the state of New York may actually be saying that we want you as a firm-wide commitment to make a firm-wide commitment to vote your shares and apply these ESG standards on companies because that's the way the future is going. Many other states across the country disagree with that, right. is part of the point. And so I think that what we're seeing today is the use of other people's money in the United States, including for states that aren't on the coast, including everyday citizens across the country, to advance values that most of those citizens don't agree with.